listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Jill Chandrani. Thank you, and over to you, ma'am.
Thank you, Mr. Aman. Good evening, everyone. Welcome to Dilip Buildcon Q1FY24 earnings conference call. From the management, we have Mr. Devendra Jain, Managing Director and CEO, Mr. Rohan Suryavanshi, Head Strategy and Planning, and Mr. Sanjay Kumar Bansal, CFO. Now I request the management to take us through the key opening remarks, and after that we can open the floor for Q&A. Now I hand over the call to Mr. Rohan Suryavanshi for the opening remarks. Thank you, and over to you, sir.
Thank you, Jill. Good evening, ladies and gentlemen. A very warm welcome to all of you to the Q1 FY24 earnings call of Dilip Buildcon Limited. The results and presentation have been uploaded on the stock exchange, and I hope all of you have had a chance to look at it. Before I begin, let me mention our standard disclaimer. The presentation that we have uploaded on the stock exchange, including the interaction in this call, contains or may contain certain forward-looking statements concerning our business prospects and profitability, which are subject to some uncertainties, and the actual results could differ from those in such forward-looking statements. Let me now share insights on the macroeconomic environment, the sector, and give you some company updates as well. Following that, our CFO will present the financial update of the company, post which we will dive into a Q&A session. So firstly, from a global perspective, growth momentum is pretty stagnant, especially in manufacturing and investment segments, in the face of moderating headline inflation with a sudden core. Market expectations of future interest rates have gone up in response to a hawkish policy stance by central banks around the world. Equity prices have flattened and bond yields have hardened. At the same time, the big picture in India is that the manufacturing and services activity continue to grow, with some sequential moderation in June in composite terms from a 13-year high in April and May, coincident in with cement production at a 6-month high on the back of a strong public spending on infrastructure and good private sector demand as well. The government's GST collection for the quarter was rupees 4,62,793 crores. The real GDP growth for 2022-23 was placed at 7.2%, higher than the second advance estimate of 7.0%. According to RBI, the real GDP is expected to grow by 6.5% during the 23-24. And according to World Bank and OECD, India is estimated to remain among the fastest growing large economies in 2023, despite some sequential moderation in economic activity in June. Now let us look at some updates for the sector. For the quarter ended 30th June 2023, MoRTH has constructed 2250 kilometers and awarded 611 kilometers. 436 land acquisition notifications were issued and land acquisition compensation of approximately rupees 1178 crores were processed for the quarter. The government is amping up its highway building target for the current year as it aspires to fast-track infrastructure in a year of multiple state polls and ahead of the general elections next year. The government has set its target of per-day construction to about 38 kilometers and plans to construct approximately 14,000 kilometers of national highways. The breakup of this is as follows. About 6,000 kilometers will be built by MoRTH, about 6,000 kilometers will be built by NHAI, and about 1,500 to 2,000 kilometers will be built by NHIDCL. The Government also has plans to raise about rupees 30,000 crores from TOT and rupees 15,000 crores from Infrastructure Investment Fund in trust. The total capital expenditure of the Ministry of Road Transport and Highways for FY 2024 has been set at rupees 2.58 trillion, which is an increase from the rupees 2.06 trillion spent last year. And according to a recent press release, MoRTH targets to achieve 91% of this capex outlay by December 2023, given the general election next year. So they will try to do that, and that's what they're saying. Now let me come to our company performance for the first quarter FY24. Our order book was rupees 24051 crores at the end of June quarter. 37.1% of our order book comprises of roads and highways. Mining constitutes 18.1%, irrigation at 17%, water supply at 12.4%, tunnel projects at 7.3%, metro projects at 5.7%, and special provision projects at 2.4%. So we're happy to inform you that we have a very diversified order book with orders in all these sectors are firing in every different state that we are working in. It is also great and my pleasure to inform you that the current orders floated by NHAI is about 1 lakh crores already, which we are expecting to build in the coming quarters. So all of these will be coming finally. Another sector also has a nice, healthy order pipeline coming in all the sectors that we're currently working in. So our strategy of diversification has really helped us there. Let me also give a recap of some of the guidance that we had given on the earlier call. On the revenue front, we had guided that we will grow at about 8 to 10%. So we are targeting that. Our EBITDA, we had guided about 13%. We had also guided for a debt reduction of 800 to 1,000 crores. We are confident and we will start seeing that sequentially from next quarter onwards, but the larger reduction will happen in the final 2 quarters. Finally, we are targeting about 10 to 12,000 crores of new orders in this year, and this will be across all the sectors that we're working in. We are also targeting some moderation in working capital cycle days. We're thinking that about 8 to 10 days of reduction will happen there. That's our aim. And as for the capex, we have already mentioned earlier as well that we are looking to now not do any large capex and only replacement capex. So even this year, we're only targeting about 50 to 75 crores. Our target is to focus on becoming a debt-free company in the next 2 to 3 years, and that's where we are kind of focused on. So that's the biggest goal for the company, improving and strengthening balance sheet, along with keeping and continuing to do the diverse sectors that we work in, and sweating our assets more and more. Now, let me hand over our commentary to our CFO, who will give you insights and comments on the financials of the company.
Thank you, Rohanji. Good evening, everyone. I welcome all stakeholders to our earnings call. Let me present the results for quarter ended 30th June 2023. During the quarter and up to the date as we speak, we have completed 2 projects, HAM projects, Patrapalli Katgora Package 2, Bilaspur Katgora section in the state of Chhattisgarh under Bharatmala Pariyojana of worth 487 crore. The second project, Doda-Vallapur Bypass to Hoskote section in the state of Karnataka under Bharatmala Pariyojana of project worth 1,278 crore on 21st July 2023. Further, during quarter 1, 24, the company won an irrigation project worth 699 crore for construction of Malargad, construction of a project on Turkey basis in the state of Madhya Pradesh. Now, moving from business to the financial performance. The revenue marginally decreased by about 1% in quarter 1 FY24 on YOY basis from 26,215 million in Q1 FY23 to rupees 26,084 million in Q1 FY24. This is due to delay in execution of old HAM projects. The EBITDA increased by 63% in Q1 FY24 on YOY basis from rupees 2,054 million in Q1 FY23 to rupees 3,348 million in Q1 FY24. The EBITDA margin increased on account of better execution of the projects and reduction in the commodity prices. Now come to the profit after tax. The profit after tax increased by 321% in Q1 FY24 on YOY basis from rupees 198 million to rupees 834 million in Q1 FY24. The PAT margin mainly increased because of the better EBITDA margins in the quarter. Now let me take you through some important balance sheet items. The capital expenditure during the quarter was at rupees 430 million. The inventory decreased in Q1 FY24 by 675 million from Q4 FY23, which is mainly on account of reduction in WIP. The debtors increased to 18,633 million in Q1 FY24 from 16,664 million in Q4 FY23 on account of debtors booked at the quarter end. But let me tell you, these debtors were realized subsequently. The net debt to equity ratio marginally improved from 51 basis points in Q1 FY24 versus 52 basis points in Q4 23. The working capital days increased to 75 days as of 30th June 2023 versus 70 days as on 31st March 23. This is mainly because of the increased debtor position as of 30th June 2023, and as I said, these debtors were realized subsequently. Now we can open the floor for the questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, and congratulations on significant improvement in the EBITDA margin. So the first question is on the same. So definitely we have highlighted all the guidance numbers, but just trying to reconfirm or trying to re-understand further. This EBITDA margin 12.8%, and now we are saying a 13% for this year. So from here on, we will be seeing a steady state of improvement, or maybe the same run rate of EBITDA margin. That's the first question I wanted to understand.
Yes, Shravanji, the EBITDA margins will remain in the same and whatever guidance we have given. So we had given 13 to 14% EBITDA margin, and the numbers will basically progress in that manner.
Okay. Secondly, on the debt reduction front and the asset monetization. So last time we have talked about the HAM projects we want to monetize, where we have a 900 odd crore kind of equity investment, and we are expecting the entire cash to be received in this year. So what is the update, and is it the main if there is any delay in receiving the cash of this 900 crore equity invested, will 8,000 crore debt reduction will get postponed maybe in 1Q or 2Q of FY25?
Shravanji, that process is underway right now. We are, that the whole mandate is currently running. In negotiations with a whole bunch of investors. What we had stated earlier as well, that we are only expecting about whatever money, only about half of it to come in this year, or whatever the whole deal is. We are only expecting about half of it to come, because all these projects, as they are getting completed, we'll only be able to transfer in a whole bunch of projects only 49%, and the rest 51% we'll be able to transfer the next year. So that money will also come accordingly with that. So we have accounted those calculations when we have given you this guidance of 800 to 1,000 crores. And we are right now, as things stand, we expect everything is running as per the time schedule that we had anticipated.
Let me add, Shravanji. On the equity investment side, FY23-24, the total equity requirement was 825 crore. Out of that, 268 crore is already invested in quarter one. We have balance 544 crore equity, which is to be invested into quarter two to quarter four. These equity investment will be basically mainly in the HAM projects, which is 503 crore and 41 crore in the coal project.
Got it. So I will come to that also. Will want to understand further that. So it's a good that we are on track, and hopefully we will be completing the monetization. Second, just to understand in terms of the pipeline. So till now, though we have just received 700 odd crore order inflow, we are looking at 10 to 12,000 crore. Definitely, we have said that the NHAI pipeline is 1 lakh odd crore. But are we kind of confident that before the close of the maybe October and November, and we will be able to get?
Shravanji, as you are well aware and you've been tracking the sector for a very long time, a lot of orders in our sector happen in the second half of the year, and historically for every year that has been true. So we are expecting the ordering to continue in such a manner that will happen. And now, depending on how much quickness the government does in different areas, we are looking. But the good part is there are healthy orders which have already been floated, and then there are a lot others that the government is in the process of floating in the different sectors that I mentioned earlier that we work in. So our confidence stems from that. And also important to note again, like I mentioned, that about almost 1 lakh crores of NHAI orders are already floated. So there is a huge pipeline of orders that is there, that is available. So it should come. So we're expecting the kind of bid prudence that we've kept. We're expecting to get decent amount of orders, and we are giving a very conservative guidance anyways of 10 to 12,000 crores that we have been winning every year anyways.
Okay. Just further to understand in terms of the one is on the appointed date for HAM, we have already mentioned in the presentation. One more mining project is big one, 2,274 crore OCP, Amandan OCP. When are we going to receive the appointed date for the same?
So only basically that project is delayed. Basically it is in delay, we can say.
Okay, but no clear idea in maybe next 6 months are we going to get. So just trying to understand in the sense that this 4 HAM projects around 3,500 crore EPC value in order book, and this 2,200 crore. So what we are looking at 8 to 10% kind of revenue growth for this year. This quarter we haven't done anything. So 13.7% or 14% ask rate is there for 9 months. So that's what I'm just trying to understand. Are we able to do that? Because and apart from this, is there any delays in 10% that we are looking at can finally turn into a 5% kind of a number by the year end?
When we have given the guidance, we have accounted all what we have mentioned in there. Okay, so we have accounted the delays in the Amanand mines also. Amanand mines, there is a delay on account of the land issues. So we are expecting that will be resolved soon, but right now it is very difficult to say anything about that. But whatever you have mentioned, we have accounted, and we are confident that whatever guidance we have given for the revenue, we will achieve that.
Okay. Lastly, on the HAM part, just trying to, in terms of the equity, the first is on the SRAM. So whatever the deal we have done, 2,349 odd crore that we are going to receive, and we already mentioned that 676 crore we have received in cash. So further, how much more cash that we are going to receive? So just trying to break this 2,349 crore, 2,349 crore into cash and InvITs. Timeline definitely we have mentioned. Just broadly, what would be the cash and the InvIT number?
So basically, Shravanji, as you know, till today we have received 868 crore worth InvIT units, and from even last quarter, we are receiving only cash consideration. So in future, there will be no further units plan to be issued. So whatever asset we will divest from now, everything will receive in cash. So as on today, out of the 10 projects, 9 projects are divested. Out of 9, 7 projects 100% divested, 2 projects 49%. The balance, 1 project 100% and 2 projects 51% will be done within, and one asset for 51% in December first half. So basically with that, the entire 10 asset deal will complete.
Yeah, that I understood. So till now we have received 869 crore InvITs, and now onwards we are not going to receive any InvITs. Whatever will come as a cash. Right, sir. Okay. And second, just part to understand the equity that we want to invest in last this 987 odd crore. So 998 million equity invested as on June. The number what we have mentioned in the presentation. What would be the like-to-like number as on March 23? So just 3 months before, what was the number? So just trying to understand how much equity we have invested.
Requirement and actual equity invested. So I'm saying the equity the 5 projects, the required equity was invested. So there is no reason to keep this equity requirement on the completed project. So we removed from the requirement and invested equity. So 986.5 crore reduced from the requirement, and the similar amount reduced from the actual invested, because those projects already completed. So balance, so you can add up the same numbers what we gave in the last quarter presentation will match.
Okay. And broadly, just the DBL infra, that 750 odd crore, that number remains the same. The date number remains the same.
Yeah, that number is the same. We have in fact paid down a little bit there in DBL.
Okay.
Yeah.
Okay. Thank you and all the best, sir.
Thank you, Shravanji.
Thank you. A reminder to our participants, please press star and 1 to ask a question. The next question is from the line of Narendra from Robo Capital. Please go ahead.
Thanks for the opportunity and congratulations on a good set of numbers. So my first question would be regarding the debt and equity that you are planning to raise. What's the reason for that, and regarding the equity raise, what would be the method of the raise? You could throw some light on it.
So Narendra, first of all, we are not planning to raise any further equity from now. If you are referring to our equity, that is from the monetization. We are not trying to raise any secondary or primary equity from the equity market.
The results, you have said that consider the issuance of
time we've come listed, that every year as a prudent policy, a lot of companies do that. Whether it's to raise any equity or raise any other funds, it is just an enabling clause. That's all that it is.
Okay, got it. It can be on the top line across this quarter.
Voice is not very clear. Yeah. You said your voice again wasn't very clear. What is the what on what? Top line?
The link that you have is across India in the Q2.
Narendra, are you using a handset? May I request you to come on a handset, please?
Yeah.
Heavy rains on various parts of India. Let me tell you, whatever guidance we had given, the company will achieve those.
Okay. Yeah. That's what I was asking. Thank you.
None. The next question is from the line of Chanmajay Gandhi from IVG Trust. Please go ahead.
Hello. I wanted to understand, sir, about the CRML project, coal mine that you have got. What is the projection for this year and next year, and what is the margin are you expecting on this front?
Basically, the project has achieved appointed date on 2nd January 2023. The project is in production. So this year, the first year of our operation, we will do 7 million ton of coal excavation, and the revenue is around 550 rupees. Our margins would be in the range of 20 to 25%. And this project is in subsidiary.
So, sir, it will be consolidated with the balance sheet, right?
Sorry, sir?
Sir, the financials of the performance of this company would be consolidated with the balance sheet.
Yes.
So the profitability also would be visible in the numbers in the consolidated performance.
Right. On full year basis, it will.
So have you for this projection for this year, have you included this profitability?
We have given the projection for the standalone numbers, not for the consolidated. Right.
Sir, and what is the growth are you expecting for the next 2 years in this coal mines?
Let me tell you, this coal mine has a fixed 25 million, then 35 million, and 6th year it will achieve the optimum capacity, which is 50 million ton, and that will run for another 19 years. So in 25 years, we will excavate 1,091 million ton in total.
At a price of 550 per ton.
No, the current price is 550 rupees, but the price is linked to the inflation numbers, the CPI, WPI.
Okay. So, sir, I understand this year it will be 1,000, next year around 2,000, and henceforth according to the plan.
इसको थोड़ा आप रेक्टिफाई कर लो. अभी 525 मल्टीप्लाई अगर 7 से करते हैं तो अराउंड 350 करोड़ का रेवेन्यू इस साल आता है. नेक्स्ट ईयर वी विल डू द 10 मिलियन, तो देन दैट विल बी 5. उसके नेक्स्ट ईयर 16 मिलियन, देन 25 मिलियन, और इंक्रीमेंटली इसका इन्फ्लेशन भी बढ़ता रहेगा. दिस इज द रेवेन्यू गाइडेंस फॉर दैट प्रोजेक्ट.
Okay, sir. Thank you very much, sir.
Thank you. From Anand Rathi Shares. Please go ahead.
I think,
Prem, your voice is not very...
Yeah, thank you for taking my question. So, just bookkeeping sort of question. So, just want to understand, did we receive any payments or cash consideration from Shrimp during the quarter, and how much was infused by us in the hybrid annuities? Because when I look at the cash flow, side presentation suggests, I mean, we've received some number which was around 454 crores last quarter, has gone up to 675. So this 190 is adjusted for the money that we've received, or how does it work? Or is it that, I mean, these were part of the loans and advances, so not exactly comparable?
Slide of the presentation, so it is up to date. So we have not received any money from the Shrimp InvIT during the Q1. The money has been received during the Q2.
Okay. And how much did we infuse during Q1 in our hybrid annuities?
Was 268 crore. So around mainly it is in HEM only, 268 crore.
Okay. And how do I reconcile it with the 190 that you show in your cash flow statement? Purchase of investment is 190. And when I look at our balance sheet numbers, so I can see that increase in investments 190, but at the same time, loans and advances have come down by 70-80 odd crore rupees. So how do I reconcile 268 and where does it lie in the balance sheet?
So, Prem, there are the two types of investment being made in the HEM project. One by through the quasi-equity, that is the unsecured loan, and one through the equity. Okay, so you will have to reconcile separately. So it will not directly reconcile with the cash flow statement.
Okay. No, because I mean,
That's good.
Of the government, they have come out with a very detailed paper on the national infrastructure pipeline. They've mentioned in a lot of detail what they want to do. So I think referring to that and then looking at and having conversations with the government would be a better place. But even they will not be able to give you such a long plan. They can say, yeah, this is all that we're intending to do. How and when and how much will happen and what pace will happen is also a function of the government that comes to power and what is their intent and implementation and all. So a lot of things that will affect that. But I think directionally there seems to be a healthy pipeline of orders across infrastructure sector. And one thing I'd definitely like to highlight, right now if you look at our order book, less than 40% is in the road sector. So it's not like we are dependent only on the road sector, and there are a lot of orders coming in all the different sectors. So our idea of diversification that we started, the journey that we started in 2015-16, has come handy given how much competition we are seeing in this sector as well. So I think for us, we are more focused on winning good quality orders across all the sectors that we're working in, sweating our assets, not making any large capex commitments, and that's that for us.
Okay. Sir, again, in terms of just coming on the number on the HAM part, so once these 3 HAM projects, which is still to be transferred to SREM, so once if that will be transferred in terms of the on standalone books, whatever the equity till now we are showing part of this 998 crore, how much will be removed from that?
You mean like the equity that is on the presentation right now? Once we transfer these assets, how much will get reduced from here?
Yes.
So basically the completed project, whatever project getting to be directed to SIM Capital, SIM InvIT, that is already removed. So there will be no further removal from the equity requirement. So all the projects already removed from the equity requirement. It was completed.
No. Equity invested and which is part of so 998 crore what we are saying we have already invested. So this is only in 18 HAM projects, and the 10 SREM projects is already out of standalone balance sheet. That's what we are trying to say?
Yes.
Okay, got it. And so just further just trying to understand, the SREM InvIT is in the DBL infra books and not in the standalone books.
Sorry, we could not get your question.
SREM InvITs, whatever we have received, it is shown in the DBL infra books and not DBL standalone books.
Shravan ji, whatever we have removed the equity capital, still there is in the book, but for the sake of clarification, whatever acting project is there, that is also in the book, and whatever we have not divested to the SREM InvIT like Niragatta, Mysore and the Patrapalli, so that is standing in the Dilip Buildcon standalone books also.
That's what I'm trying to understand, sir, on the number part. So two things, just whatever you said. So broadly, roughly, how much equity still will be there? The 3 projects that we still have to transfer to the SREM. On the standalone books, how much equity we are still showing?
So, Shravanji, can you take it separately, because the equity is standing in the books of DBL standalone also, and it is standing in the DBL infra also. Okay, so what will be transferred when the entire 10 projects will get completed. Okay, so we can take it separately and we can give you the number.
Okay, and in general, DBL SREM InvITs, whatever we are receiving is shown in the part of DBL infra and DBL standalone.
So basically, we have received units in DBL infra assets and DBL both. So out of the total 868 crore worth unit, the total units in DBL infra assets is 324 crore, and in DBL it is 513 crore. So both the level the units are there.
Okay. Thank you.
Thank you. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Good evening, sir. Congratulations on good set of numbers. Sir, my question is on the order inflow target, which we are talking about around 10 to 12,000 crores. So what would be the non-road portion and kind of work we are targeting this year?
So basically, if you can see our order book breakup, Road is generally close to 40%. So yes, this year also we are targeting road close to 40%.
So it is safe to assume around 4,000-5,000 crores should be from roads.
Right.
And sir, on what kind of margin do we expect from the non-road segment? Because now, as you said, steady state margin going forward will be 13-14%. But can we see any better margin coming from the non-road segment which can take us our margin?
Jitenji, the margin guidance that we've given is a blended margin, and to give it from different segments would be unfair again. Like I mentioned, every time when you bid for a project, it's based on multiple factors when we bid and the margins that we get. So hence, to pick out and give each this thing would be difficult. Also, as part of our bidding strategy, it would be wrong to hand out different margin profiles of each sectors and give it to all our competitors as well.
I understand. There are corporates who give, but it's okay. My point was from the non-road, as you said, 6,000 to 7,000 crore. But can you just give us a breakdown, like what you are looking from the non-road? Because we have been present in many segments. So any particular segment or news we are targeting this time aggressively from non-road, or we want to focus on.
Sir, all those segments that we work in, those are the segments that you should see orders coming in. There is no specific breakup that we, at this point of time, have to offer.
Any pipe, as you said, NHA has a strong pipeline. We understand that. So any pipeline you have identified, like from metro or water supply, irrigation, or we'll be bidding the way it will come. That is what I understand, right, sir?
All these segments have healthy orders coming, and we are looking at all of them.
And sir, in terms of competitive intensity, what is your view now? So we have seen competition in the past. So this year, what is your view? Like, do you see this intensity to remain, or it will come down? Or how has been the experience so far? Like this year.
Competitive intensity is dependent on multiple factors on the size of the project. Smaller size projects will see more competitive intensity. It also depends on the type of the project. Let's say EPC versus HAM. EPC is more competitive intensity. HAM has reduced competitive intensity. Different segments have different competitive intensity. Different states have different competitive intensity. So it's not like a one size fits all. It all depends on where exactly are we working, what segment are we working, how big is the project, all of those different things. Who is the payment agency? Like, which agency? Whether it's a municipal project, whether it's a state government project, whether it's a multilateral funded project, whether it's a national government funded project. All these things change. All these have a different. We see different things happening in based on multiple of these factors. So it'd be very different. Yes, competition intensity in between has become much higher because of the government reducing the requirements for bidding, which they again brought it up. So there's some sanity there, but they're still very competitive in the lower range of projects, in the lower cost of EPC projects. Yes.
So, but sir, just last thing. So you mean to say that we will focus on central government and multilateral agency funded projects. That is something which we are focusing on, so that the payments should be on time. That way, that's the idea, whole thought process.
We focus on multilateral and national government projects, and also state government projects where the funding is being tied up, or we know that there is a very good visibility.
So just last thing, sir, you said 10,000 crore is the outstanding pipeline as of now, right? Where you are awaiting the results.
Yeah, 10,000 crores of projects where we have bid, but the results have not opened.
This is any segment you can highlight, break up between the segments?
So different segments that we bid in, sir.
Okay, so thanks for my side. Thanks a lot and all the best.
Thank you, sir.
Thank you. A reminder to participants, please press star and 1 to ask a question. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. Rohan Suryavanshi for closing comments. Thank you, and over to you, sir.
As always, I'd like to thank all the participants for attending our conference call and all our partners for patiently asking all the questions that they had. In case we've not been able to answer some of the questions or you still have doubts, please feel free to reach out to our investor relations at Essential or our own team internally, and we'd be happy to help you with any doubts that you may have. Again, we appreciate all of you coming on the call, and I look forward to seeing all of you guys in my next quarter call. Have a good, happy monsoon, guys.
Thank you very much.
At TVS.
Thank you. Ladies and gentlemen, on behalf of Dilip Buildcon Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.